Hey everyone, welcome back to the Mortgage Heroes Weekly Podcast, where we talk about how you can win in real estate and mortgage. Each week we have a new topic to discuss and dig into. We share opinion, perspective, advice, and insight that helps to bring forward the most important topics of the market to the table. I'm your host, Andy Cruz, here in Business Development, and today I have with me
Will Flores
and
Brian Landeros, aka Brian Lends Money on Instagram.
Brian Lends Money on Instagram. By the way, for those of you who are listening to the show, not watching the show, Brian has adopted sport coats.
Coats for the goats.
Coats for the goat. So today he's wearing the goat coat.
Goat coat.
Is that goat coat number 2 or number 3?
This is goat coat number 1. I am going to go pick up goat number 3 after this.
Awesome.
Yeah.
Yeah.
We went coat shopping.
And why is that, Brian?
Well, honestly, like I was saying earlier in our meeting, is just Monday I woke up with a new mindset, a new mentality, and a new intention, and I wanted to look good, feel good, and close better. So I said, hey, let me try on this sport coat, and since then we got an open escrow, 6 new clients, 2 DU approvals, 1 on the way, and it's like, well, when I didn't wear the coat, you know, and even our partners are like, Brian, I'll need you to wear a coat every day from now on. It's standard.
It actually just makes me want to go get a coat. Can I borrow yours now?
It might not fit, but you could definitely borrow it.
That's awesome. That's awesome. Thanks for sharing that.
So we're going to give the coat is the most recent addition to all your behavioral changes, but we're going to give it all the credit.
100%. It's like but it's because the coat brought it full circle. It's like everything was there and the coat just solidified
the
it.
finishing touch.
Well, we already know Superman wears a cape.
That's right.
That's his cape.
Mortgage Heroes wear a coat.
Cape with sleeves.
There you go.
Well, last week, you guys, we talked about things we'd already been hearing people talk about in 2023. So if you missed that episode, you can go back one episode. You can hear what are some of the things we're already being confronted with, questions we're being asked, and answers we're giving. Already only 1 month into the year, it has already been kind of a tirade of topics, and it's not looking like it's going to ease up anytime soon. We discussed some new lending practices with Bank of America, Wells Fargo. We're going to keep our eye on that, see how those unfold over the course of the year. So if you missed that episode, you can go back one show and catch up that conversation there. But we're going to have an interesting conversation today because we need to talk about interest rates and what that means for people in 2023. So let's just start where the beginning is. Let's start where were rates at the beginning of this year? What was the market kind of expecting, and what are we seeing already?
Yeah, we were seeing actually rates in the 7s, something I haven't seen in many years.
I've never seen
it. New to you. Darn millennials. But they were in the 7s. And, with inflation actually settling down a little bit, it's just giving us that hope that, maybe this is the end of inflation. We don't know that for sure.
Right.
But what we have seen is now recently just quoted 6.25%.
Oh, nice.
Which is great.
Wow, that's pretty good.
Seeing the 6s is great. And then we just locked in a VA, completely purchased at 5.625, which is another great thing.
Shoot, really?
Yeah. So we'll see where it goes. I mean, we all know how volatile the market has been and will be until we really figure out this inflation situation.
Yeah.
And all the economic indicators start performing in our favor. Then these things will start settling down where, it'll have that impact on rates. But 100%. We don't know, guys.
So you're saying that, so the 5 5/8 you said it was 5.625?
5.625, yes.
So that was a VA purchase?
Purchase, yes.
And then the one that was 6.25, what kind of deal was that one?
That's a conventional purchase.
A purchase as well?
Yes, correct.
Okay, how much, what was like the down payment
Actually,
situation?
on this one, it was at 5% down.
Oh, nice. Okay.
Not bad.
And so did that have the mortgage insurance separate, or was it baked into the rate?
No, we actually 5%. It requires a mortgage insurance, but we also have one of the lowest mortgage insurances.
Yeah,
so the payment just worked out great.
Got it. Wow, and that's pretty good.
Obviously, still the idea is to in time when rates, because historically speaking, rates do go down. History always repeats itself. We'll go back and refinance that. So,
100%.
But it's all good. Still 6.25 when we're at 2s, 3s. It's still, half.
Well, but also I want to make sure I say something in the context of this.
Yes.
Like that may be true for people who already had homes or bought a home then. The person who's buying a house now, that's not true to them. They maybe went from being a renter only to now being a homeowner. That's the real milestone there.
Yes.
The rate is the rate. The rate can change over the future. You can reduce it when it's lower and the market's in your favor. But going from being a renter to a homeowner, that's really the milestone.
Yeah.
I think one of the things that I wanted to reiterate is that your mortgage rate, although this is the average or what it is, it's connected to your credit. So if you have a better credit score, you can expect to have a lower rate and vice versa. So that's something to keep in mind. I mean, this is just an average of all the rates, but honestly, take it personally and get a quote for yourself because
that's
everybody's
correct.
different.
Yeah, absolutely. It can look totally different if you're at 740 versus 680 or lower even.
Yeah. I mean, we also just did a non-owner occupied. $1 million purchase, putting 30% down. Great, excellent credit scores, 7.25%. 30-year fix. It's a non-owner, an investment.
Yeah, an
That's
investment.
actually
Wow.
that's
pretty darn good. 7.25.
Yeah, because we're seeing the
eight nines.
high eights on that.
Wow, that's pretty good.
A couple of weeks ago. So yeah, there you go.
solid.
I hope that gives everybody a bit different perspective of where more or less we're at.
Yeah, that's good. I'm actually really glad timing wise we're talking about this because coming up here at the first, it's the 1st of February now is upon us, and so it's like, okay, the Fed's coming out with their rate hike, and now we're going to get some more information about what they think is happening in this quarter. So this is actually really good news, if you ask me. I didn't know exactly what you guys were going to say today, so I'm really pleased with this.
Did we do good? Yeah, we did good.
It's great because, in my mind, in my recent history, I'm thinking, man, we were talking about 7s, high 6s, and it's like, dude, that's crazy.
Yeah.
Especially from where they started.
Correct.
But again, relative to whether you're being a renter or going to homeownership, the milestone is that you're an owner now. I understand people aren't refinancing now. They got their 2.5, 2.25, 3. They're good.
Yeah.
They're set for now. So
that's right.
Okay. So let's continue this about rates and like realtors. What are realtors talking about right now? What are they asking you? How are you having those conversations? What are you guys talking about with them?
So one of the things that I'm honestly seeing is a lot of questions. Where are rates going? What are rates at today? How do you see rates being in the next month or so? And I feel that they always go based off headlines. So whatever they see on the headlines, that's what they gravitate towards. And although that's great and everything, I feel that sometimes realtors need a little bit more of the lender's perspective in rates so that they're able to give accurate information. Because as soon as we hear anything that has to do with rates dropped, even if they drop a teeny tiny bit,
right,
realtors are screaming, rates drop, rates drop, rates drop, rates drop.
Yeah.
And although it's true, in reality, they dropped a little bit, not significantly enough to have a huge swing in a buyer's perspective to want to buy. So I feel that right now a lot of it is uncertainty and them wanting to know where are rates going, how do I prepare myself, and then barely starting to catch on to the 3-2-1 buy down. So I feel that a lot of questions come from uncertainty and wanting to know where rates are going to go, how they're going to move. And like I said, we don't have a crystal ball, but we do have indicators and we do follow information that lets us know.
But that's an important point, is because they can change, like as the sun comes up in the morning and sets in the evening. Literally. The market's open and those rates are changing, and it's a fluid market. So it's good that you're having that conversation.
Yeah.
Anything other different that you're hearing or you're talking about?
No. It's actually, that was the biggest in bold. You know, what are rates today?
That's like every time. Today. I'm like, well, right now.
But you know what the great thing is? They understand that the market's that volatile, right? Where they understand what are the rates today. Because most consumers, when we get them approved, Andy, what will end up happening is we approved them last month, right? And here we are again. They're thinking the rate's going to be the same.
Right.
And that could actually be either higher or better. So
the
great thing about that is we just got to continue to stay in constant communication, with the clients.
And
to make
setting the expectation off the bat and letting them know.
Absolutely.
I think I'm great that you brought that up, is letting them, hey, this is what you're approved at today if you bought a house today in today's market. But things could change tomorrow, the following day, and even the following week.
So
no, that's you brought that up.
That's good. I'm glad you're talking to them about that, because a lot of times there is that misunderstanding. It's like, oh, the rate I saw quoted on TV, is that the one I'm getting? Like, wait, hold on. That's a scenario that doesn't even match what I'm looking at here on paper.
And that's exactly why it makes it so much difficult to unwind people's mentality, because they see so much stuff online, so much stuff on TV, and here's stuff from left and right that it's like, well, that's what everyone's saying, but what's the reality? It's not a one size fits all. It really just comes down to what your situation is, what your finances is looking like, and then that's going to determine exactly what
it's like. It gets imprinted, and then you have to like combat what's imprinted, which actually has nothing to do with their exact scenario
at all. And you're like, and they're like, well, but I saw this online. But
you're like, did you read the little? It has a little star.
Correct.
You read the disclaimer part at the bottom.
Nope.
Based off a 760 credit.
By the way, since we're talking about that, there are some banks that do that online. They'll quote the rate, and you look at that fine print. I know I've heard you guys talk about this. I've overheard you talk about this. You go, hey, read that fine print. That says you're paying 2 points to buy that down.
Oh yeah,
100%.
So that happens.
People don't see that, and then they get to the table and see all the numbers. They're like,
what do you want me to come up with this additional money? And then if you're really thinking about the average medium sales price in San Diego, $860. Multiply that by 2. That's like
16, almost 16,
17,000.
That's a lot of cash. Yeah.
Right.
So I don't know
wish I had
who
my
had-
calculator here to calculate.
I was
that.
like,
No,
JC,
you're
you got the
good.
beans.
You're in the ballpark. Yeah.
The ballpark, exactly. Estimated.
I said, I know
That's
2,
on top of your
10,
fees.
16.
On top. On
Where's
top.
my calculator?
So let's talk about borrowers. We're already on
Yeah.
it. So let's talk about what kind of borrowers are we seeing right now? What are some of the things that we should be looking for? If people are listening to this or they're watching this, when they're out doing their life, doing their week, doing their work, doing their family activities, their kids' sports, what kind of things would be hints or clues that they might be talking to someone who we could help get into a home this year?
Yeah, I mean, there's a lot of hints, a lot of clues, right? One of them, especially if you're renting.
Yep.
And
Yeah.
your rental payment is just about a mortgage, because I'm sure people are seeing, hey, I got a 2-bedroom renting for $3,600.
Yeah.
Well, what would it own?
Yeah, that's a lot of money.
What a payment will be if I owned a home, right?
Yeah.
So that's the thing. So if you have anything like that, that's where you want to make sure that we're pointing people in the right direction. And just, it doesn't hurt, right? It doesn't. And one of our sayings, Andy's been, it doesn't cost you a penny to ask the question,
Right.
but
It can't cost you
It can cost you thousands by not asking. Yeah.
you know what I mean? So it's like, and none of the services we provide are in the beginning cost you anything.
Right.
Right.
There's no out-of-pocket expenses.
It's a free resource.
It's, Thank you. That's what it is.
So are you guys talking with a lot of people right now that are looking to buy that are they single and they're professional, young professionals? Are they married and established with kids?
That's
Like who's kind of out there that you see coming in or doing applications online or calling you on the phone?
Lately, I've been working with a lot of young couples, right? And
Okay.
people that are probably towards the ages of 26 to 29, even into the early 30s.
Okay.
And what I've been seeing is that they are now wanting to step into the market and really understand more about what it is that it entails, how
Yeah.
much money I'm going to need, what is prices looking like, what is my
Yeah.
monthly payment looking like. I just had a consultation today, first-time home buyers that they were trying to buy last year, but they couldn't get approved because they didn't have the down payment funds, they didn't have the income.
Yeah.
Fast forward to this year, they have a new job, have better pay, and are able to get approved. So we were
That's
able to
good.
approve them today, and their goal is literally to get in the house, get their feet wet, start building equity.
Yeah.
And then I told them, hey, you guys don't plan on living in this house forever, right? And they're like, no. Great.
Right.
Well, the good thing about this is that this house will set you up for your next house.
Yeah, yeah.
And potentially earn
That's
some
good.
rental income, right?
Yeah.
And they didn't know about that. They're like, oh, what? Yeah.
Yeah.
Really? I can
Right.
do that? Yes. And it's all like by leveraging your current asset to, from there, build on to other ones as well.
Good.
And one of the things we always speak about is generational wealth. And I asked them, I was like, hey, I don't know your long-term goals, but this for sure will help in whatever it is that you're going to
Correct.
do.
Yeah.
I'm
Yeah.
sure, right?
Yeah.
So for me, I've been working with a lot of young couples, a lot of, people that are, stepping from that younger demographic to now wanting to understand what it is to have ownership, to, have an asset that's
Yeah.
going to help you produce more income. And I feel it's a great time to start learning more about how you can
Yeah.
benefit from owning real estate.
And to Memo's point, like if they're paying $3,400 as a young married couple, $3,600, it's like you're already making the payment. Like,
Yeah.
if you got the credit and you have the income and to make that payment, and you have your debt to income ratios in alignment, and you got some money for down payment, like you should seriously be talking about buying a house.
And one of the things that we agreed on is that you are already paying a mortgage.
They're paying
It's
somebody
just not
else's.
yours.
Yeah. That's right.
Just saying.
Just saying, though,
and
hey.
For me too, Brian, I've been seeing the same thing. We've been approving more millennials. They're going to be around
Yeah.
the 28, 32
Yep.
years of age. I really think a lot has to do also with all these social media platforms.
Oh, 100%.
You know what I mean? They get to see, well,
Yeah.
hey, this
That's a
guy's
good point.
buying, or, we're renovating this, or this house is flipping. Then we have all these shows out there now.
Yeah.
And so I
a good
really
point.
think it gets them to feel like FOMO.
Yeah.
Fear of missing out,
Yep.
right?
Yep.
Like, I got to get into it. And as we've seen, this has been the longest in our market that we've seen appreciation. I saw an
Yeah.
article, it said 130 months consecutively
Consecutive, yeah.
of appreciation.
Yeah.
So that's 10 plus years,
Yeah,
guys.
yeah.
That your parents are saying, probably talking at the dinner table, if they're renting, I
Yeah.
should have bought.
Yeah.
Because what if I would have bought 5 years? What if I would have bought 2,
Yeah.
3 years ago?
I remember that.
You know what I mean? Like, those are the conversations I think that are happening at the dinner table, where it's getting this younger class of people
Yep.
wanting to, I got to make that move now.
I remember just within the years of our experience in this industry, 5 to 7 years, kind of being that window of like, here's where you have appreciation, here's where some cooling off happens,
Yeah.
and then it kind of that cycle starts over again. 5 to 7 was kind of like that. That's like ingrained in my mind.
And this was 130, Andy.
That's crazy.
and
130
Wow.
months.
And to
I
your
didn't see that yet. That's amazing.
And to your point, though, a lot of the social medias, like now that now that it's out there, it's kind of like when entrepreneurship became popular. It's like real estate now is popular. Being a real estate investor, getting into wholesale and all that. So a lot of people are starting to want to gravitate towards that. But what I am seeing,
everyone's got to live somewhere.
Compared to older generations, I feel the millennial generation is wanting to get into the market a lot sooner because they know of the appreciation over the years. Whereas I feel past generations were, hesitant because of what past experiences. Whereas now they're like, hey, well, I have all these resources. I know if I hold, it's going to go up in value.
Yeah.
I think the motivators changed a lot too. Now that you brought that up, I'm making me kind of reflect a little bit. I think the motivations changed. I think generations of the past, maybe even my parents' generation, it was like, hey, you go to college, you get a job, you get a house, you have a family. But I think that's changed because it's been more recent that the house has been considered more of an asset for appreciation and value to hold and convert rather than it just being the place you settle in. Yeah. So I think getting more maximized value of real estate is really more of a trend change in the last decade.
And that's the beauty.
Before.
Like that's the beauty. And that's what we teach when we meet our clients, when we speak to our realtor partners. We talk to them about a powerful word called leverage.
Yeah.
Leverage.
Yeah.
If you have this property and you treat it as an asset, not something that's going to be personal to you because it's just a material thing,
right?
But if you treat it as an asset, this could really take you to that and catapult you to those next levels. Definitely. If you utilize it right.
Yeah, no, that's true.
You know what I mean? And those are the things that when we started my career, we didn't think of it like that because again, our train of thought was longevity.
Yeah.
This is like probably your forever home, and now it's a lot different. Now we say, this is not, because we already know the stats say that when you purchase a home, the likelihood of you refinancing, selling is highly likely that you're going to refinance within the first 4 to 7 years.
Yeah. Yeah. No, that's true.
You know what I mean?
Yeah. So, all the evidence keeps stacking up.
And I think now it's got to change. I think it's actually, people are refinancing within 8 months, a year.
Well, people buy and they're like, well, how fast can I refinance?
Yeah.
I'm like, you haven't even bought the house.
So the conversations are different and we got to adapt. If we don't adapt, then we become the blockbuster, in the business. And that's not us. We want to continue to be that Netflix where we're bringing, credible information, knowledge, expertise to help them understand that powerful word of leverage.
And change with the demands of the market.
Absolutely.
100%.
And that's what we're here to do.
Well, and I think, that's a great takeaway for today. It's like, being able to be nimble, stay on your feet, on your toes, but also adjust to the market. And with that being said, one of the most important things I think we help people do is we help them understand where you're at today and how far away are you from where you need to be in order to achieve home ownership. So if you're listening to this or you're watching this show, if you have not yet talked to William Memo or Brian about getting your debt to income ratio in line, checking your credit, doing a full loan application, and at least seeing where you're at today, like that's your next right step. You have to do that. If you're trying to buy a house in 2023, do that in the month of February.
Yeah. Just like you go get a physical every year, you should get a financial, a financial outlook of your whole financial life. Yeah, a financial checkup.
Absolutely. Yeah. That's it.
Inventory of what's going on, what's coming in, what's coming out, so that you know what you need to do and what needs to get taken
care of. And remember,
like
I know I feel like I'm, I beating a dead horse, but like it's important for us to help you guys who are watching this and listening. Like we want you to get into the home you want. We want you to be able to move your family into that place. We want you to have that asset for long-term longevity. Right. So if you're listening to this or you're watching this and you know that you need to do that, just go ahead and take the next right step. Yeah. DM us, send us a comment, reach out to these guys, and let's let them help you get your financial house in order so you can actually get an order on a house. You like that? You like how I did that?
Hey. And here's the last thing that I would like to mention. The real estate market is changing and it will change. Yeah. This is a cycle that we're going through that we may not see later down the line, especially when we're talking about big companies wanting to buy $110 billion worth of property. There's these big investors that are trying to make us not become homeowners, but be their renters.
Permanent renters. Yep.
There's articles out there. These are the things that we're out there, we're in the trenches, making sure we're understanding, we're relating this information. Yeah. It's going to be different, guys. The market's going to change. 100%. I'm telling you, this is what I'm listening to multimillionaires who are actually in the real estate market that are doing, and they're encouraging, get into your home. Interest rates, they rise, but what goes up
must come down. I'm not a physicist.
And I think you're making a key point is that it can vary. There's a high likelihood that it will get more difficult. And I don't want to be like a Debbie Downer or pessimistic, but the reality confronting us is that the likelihood is there's a high chance that it is going to get more difficult for people to get into home ownership as they wait longer and longer.
That is correct.
So be proactive.
That's
100%.
Final thought, Brian.
Final thought, honestly, what I was going to say is that even though right now might not be the best time for you, it's the best time to get prepared, right? And what I mean by that is
great.
going and
Good
sitting
point.
down with the lender, speaking to a realtor, and then just getting a mock approval and knowing where you stand, because chances are that you're closer than you think, and maybe there's only a few things you got to get, taken care of.
Dude, that's great advice.
So that's all I have to say. Take the time to prepare and be proactive and not reactive.
There you go.
Did you hear this guy?
Oh my God.
Man,
who is that guy?
He sounds like he's hanging around you,
You know
a lot.
what? The cape is good. The cape is good.
That
I like
goat
the
coat.
cape.
Shout out to Go Code. That wasn't me.
Yeah. Coats for goats. I love it.
Well, guys, that was a great conversation today. Thank you for bringing that to the table. I want to make sure that we help as many people as possible. We don't win unless the people listening to the show and watching the show, they win first, or they win alongside us. We cross that finish line together.
Correct. And here's the thing with us. We know everybody, a lot of people in the industry.
Oh, yeah.
There's a reason where we're at because of, right?
Who we know, what we know.
One of the sayings my mom used to always tell me is, Mijo, tell me who you are. No, tell me who your friends are so I can tell you who you are. And I didn't understand that.
Yep.
I get it now.
Yep.
And that's who we're surrounded by.
Yeah.
100%.
Awesome.
So,
well, thank you guys. I appreciate you
you.
being here again with me today. And thanks again for listening to the Mortgage Heroes Weekly Podcast. If you need help, you can reach us online at mortgageheroes.com, Facebook, Instagram, YouTube, email, phone, or text. Remember to share this show with the people you care about. We appreciate you, and we'll see you all again next week.
Later, guys.
yes, bye.